Hello, welcome to ACCA F3 Financial Accounting. Today we will be learning about bank reconciliation. In theory, a business's bank statement should show the same balance as the one in its company cash book. However, in reality, there may be different reasons as to why this may not occur. One reason as to why it may not balance could be because of timing differences. Timing differences relate to the bank's clearing process. Sometimes it may take a bank 2 to 3 days to actually clear your deposit or transaction and update your balance to reflect that. 2. There could be an error in casting or totaling. This is simply a common mathematical error and it could easily be fixed. But the problem is the error can arise in either cash book or bank statement. 3rd, there could be bank charges or bank interest that we did not record yet in our cash book. This is just one example that we may not have recorded yet. There are other things such as a direct debit, which has already been automatically done for us and adjusted for in our bank statement, but something that we need to manually do for adjusting our cash book. So transactions that have occurred by the bank would be automatically adjusted for in our bank statement, but we need to check our bank statement in order for us to update our cash book. So there can be things that we did not record yet and therefore cause an imbalance. Now let's go through some adjustments that will need to be made to our cash book. First was the bank interest or bank charge that we have discussed earlier, in which we only come to know the amount, what date it occurred, when we check our bank statement. So we will need to manually adjust this in our cash book. Second are errors, which we can accidentally make in our cash book. So this should reflect errors that were made in the cash book itself, because errors that were made in the bank statement will not have any effect in our cash book. Now third is a dishonored check. What a dishonored check is when the bank rejects the check. So for example, let's say I'm supposed to be depositing a check to my bank, and this check represents a payment to a supplier. When I've already deposited the check, I'm going to assume my bank balance is going to reduce. So what I will do, I will reduce my balance in my cash book. But then, after days of clearing, the bank figures out that the check is much too big and my bank balance is insufficient. So they're going to have to dishonor the check or have the check bounce back. So, in other words, the check never went through and my bank balance had never decreased. So what I will have to do is reverse the change that I made to my cash book. Fourth is a direct debit or a standing order. Now these are transactions that are automatically done by the bank. So for example, if I have a fixed amount of electricity that I have to pay every month, $100, then I can ask the bank to automatically deduct $100 from my bank balance on a routinely basis. So this is something that automatically adjusts in our bank statement, and I would need to manually adjust for it in my cash book. So in other words, whatever is automatically done in our bank statement should be reflected and adjusted for in our cash book. Alright, now let's begin discussing the adjustments that should be made to the bank statement. Firstly, whenever there is an outstanding lodgement, or we also call it outstanding deposit, we will need to adjust the bank statement for it. Now what exactly is an outstanding lodgement? It is when a check which has been received by the business, paid into the bank, and already adjusted for in the cash book. So as you can see, this is in a transaction where we have received some sort of income and we need to deposit now into our bank. And so we would have already received the check and we would have already adjusted for it in our cash book. So now all we need to do is just give it to the bank so that our bank balance can now increase. The only problem is that it has not yet been cleared by the bank. So remember the clearing issue where it takes a couple days for the bank to clear our transactions? So this is an example of a timing difference. A bank statement will need to show the balance after the deposit has been cleared. The second adjustment is whenever there is an unpresented check. So what happens is that my business has already drawn a check. Okay, I'm preparing a check that I will need to pay to a supplier, for example. So I've already adjusted for a reduction in my balance in my cash book, and all I need to do is now give it to my bank so they can reduce my balance for real. However, all I did not do was present it to the bank. So if the bank has not received my check, it will be unable to reduce my balance. So what we will need to do in a bank reconciliation is to show the balance that we have after assuming the check has been presented. The third adjustment would simply be errors made by the bank itself. So if earlier there were errors made in the cash book, then adjustments should be made to the cash book. But when the bank makes an error, perhaps they have accidentally transferred money into our account instead of someone else's, then the bank will have to do an adjustment to that, and our bank statement is the one that should reflect the correction, not the cash book. So if you recall our statement of financial position, under current assets, we have a cash balance. Okay? Now, which balance should we take? Should we take our cash book balance, our bank statement, or which to show as our cash figure in our statement of financial position? The answer will be you should take your adjusted cash book balance. So, you will have a cash book balance in the beginning of the month, and when you receive your bank statement, you're going to have to perform a bank reconciliation. From there, you're going to adjust your cash book balance, and that is the final balance that will be shown in your statement of financial position. Alright, now let's take a look at this question. Let's have a look at 14.1. Your cash book at 31st December 2003 shows a bank balance of $565 overdrawn. Now be careful when it says overdrawn. This means that you have an overdraft. An overdraft is a negative bank balance. So when you prepare your workings, make sure that your balance is a negative figure. So I'm going to place here brackets to show that it's negative. On comparing this with your bank statement at the same date, you discover the following. Now in here we will need to assess which are going to be an adjustment to our cash book because they have given us a cash book balance. Okay, so we are going to adjust the cash book here. 1. A check for $57 drawn by you on 29 December 2003 has not yet been presented for payment. Now they've given you some information here. It's not yet been presented for payment, and it's a check that was drawn by myself. So this is known as an unpresented check. Okay, if you go back to the description and the slide before, it says that it's a check drawn by ourselves but not yet presented for payment. Now how are we going to adjust for this? Let's think. An unpresented check should be an adjustment to the bank statement. And currently we have a cash book balance, so we should not adjust the cash book for the unpresented check. 2. A check for $92 from a customer which was paid into the bank on 24 December 2003 has been dishonored on 31st December. What is the correct bank balance to be shown in the statement of financial position? Well, as you can see here, it says that it's a check that we received from a customer, but it was dishonored. So the bank had rejected their check. So technically we were supposed to receive a payment of $92, but we did not because the bank rejected it. We would have assumed that we received the check. So on 24 December, what we would have done is added that $92 into our cash book. But now it's 31st December, we did not receive the payment, so we will need to remove that $92 from our cash book. And if you go back to your notes, a dishonored check is qualified under an adjustment for a cash book. So in here what we should do, we should deduct the dishonored check because in this case the check is from a customer and the customer is paying to us. So we would have assumed that we would have already received this, but now we did not. The adjusted balance will be $657 overdrawn. Okay, let's take a look at number 14.11. The following information relates to a bank reconciliation. 1. The bank balance in the cash book before taking the items below into account was $8,970 overdrawn. So they've given you the original balance in the cash book, so this is not the adjusted balance yet. Because it's $8,970 overdrawn, make sure that the figure is shown in negative. So how about we begin adjusting from the cash book first, because they've given us the balance shown in the cash book originally. So let's find information that will cause an adjustment to the cash book. 2. Bank charges of $550 on the bank statement have not been entered in the cash book. So information 2 is quite obvious. It tells us it's a bank charge and it was not entered in the cash book yet. So we will need to adjust for this. And because it's a bank charge, that means our balance should reduce. So we're going to have to deduct $550. Now let's find more information before we can conclude our cash book balance. 3. The bank has credited the account in error with $425, which belongs to another customer. Now if you notice, it says that the bank has credited the account in error. This is an error that was caused by the bank and so should be an adjustment to the bank statement. 4. Check payments totaling $3,275 have been entered in the cash book but have not been presented for payment. So as you can see, it's already been done for in the cash book and we did not present the check for payment. It's an unpresented check. So an unpresented check is an adjustment to the bank statement again. For number 5, a check totaling $5,380 have been correctly entered on the debit side of the cash book but have not been paid in at the bank. So it's going to be another adjustment in the bank statement. So we can conclude that our adjustments to our cash book is complete. So all we need to do is conclude by deducting $550. This will give us a $9,520 negative balance. So this is our adjusted balance. We need to find this adjusted balance first because our bank statement, after being adjusted, is also going to show this final $9,520 balance because remember, we assume that the cash book and the bank statement balances are equal. So if you go back to the question, they're asking us, what was the balance as shown by the bank statement before taking the items above into account? So they're asking us for the before bank statement balance. What we have found here is the after bank statement balance. Okay, because this is adjusted for, and if the cash book already has an adjusted balance, we can assume that the adjusted bank statement balance will be the same because in theory they should be equal. So all we need to do now is work backwards. So in here I have prepared slight formats to how we are going to prepare this bank reconciliation. So I've ended with the adjusted balance, $9,520, and between the bank statement balance and the adjusted balance will be items of adjustment. So let's go back to the question and fill in the items that needed adjustment just now. It says here the bank has credited the account in error. So if our bank account has been credited, that means it has been accidentally added. So we will need to remove this error of $425 as seen like this. Let's go to the next adjustment. 4, we had unpresented checks. Unpresented check had to be reduced because we are going to be paying this $3,275 and our balance should be reduced after we have presented them, as seen like this. The last one says checks totaling $5,380 have not been paid in at the bank. So it says paid in. Paid in is supposed to be we have received it. Another way of understanding if we have received it or not is seeing that it says it has been correctly entered on the debit side of the cash book. If our cash book is debited, that means our cash balance is going up. It's increasing. And what will cause an increase? If there is an inflow of cash. So in this case, we will need to add $5,380 to our bank balance, as seen like this. Okay, so we need to find the original balance. So all we need to do now is just work backwards. Take the adjusted balance, negative $9,520, and minus the positive $5,380. Add back the $3,275 and add back again the negative $425, and you should get your bank statement balance, which is $11,200. We have come to the end of the chapter. Thank you for watching.